So good morning, everyone. As I said, we will not be conclusive in this session. Just we'll like to have the overall picture, what is happening in overall broader market, then what is happening across the different sectorial indices like metal, banks, auto, IT, what is happening on particular sector. And the best way to know who is best, compare, right? Compare between whether I should invest in IT or either I should invest in auto, or maybe I invest in both. Which one to invest? Which area I should focus more or invest more? Give 1 minute, please. Yeah, sorry. Somebody, I don't know how, is getting wrong password message. Others joined here already. Okay, so the basic thing is we have a limited money, no matter what. We have a limited resource. We have to put that resource into the best performing index. That is what we are trying to do with all the analysis, whether it's a fundamental, whether it is a technical. Ultimately, what we want best return we can get through the market. If we are, suppose we are getting the best opportunity in the real estate, why would we like to invest in the share market? The same way, when we know that share market is a rewarding, we would like to know which sector, which company will be best. To know all these things, that's called the top-down analysis. Means what is the broader market doing? Whether stock market is better than gold, whether stock market is better than real estate. Once we reach some conclusion, okay, stock market, or maybe due to diversification, we know that this holds some value. We can invest in the stock market. After that, we will go to the smaller pictures, right? Which sector is better? Which stock is better? What's the best time to invest? Or best price to invest? So all those approach comes from the top to down. So we will focus on analyzing these things only through the chart. Let's start. First of all, let me delete all the lines. I'll show how can we proceed and how we can think of it. So this is a BSC 500. I taken the BSC 500. It's equivalent to NSE 500, and range, movements, everything will be similar. I don't want to delete my lines on Nifty 500 chart. So let's start doing on BSC 500, how to proceed from zero, how to read the, start making the trend lines, channels, and those things. So first of all, we'll see what is the trend here. Obviously, trend, we can see it's an upside trend. There is no doubt. It's an upside trend. So in the sideways trend, we have to focus whether this is a reversal or not, or in more best time. Like if there is some sideways trend, there also we can determine which is the area which is bullish. So same way, this is an uptrend, but in the uptrend, whether this is a reversal or uptrend will continue, that's what our focus will be. So here, to start with, we should know what is the extreme ends, what is the extreme highs, and what is the extreme lows. Here we can see there are multiple extreme lows. So considering these extreme lows, we can have one channel. So this is the channel in which all the prices will perform. All BSC 500 is performing till now. I'm not saying it cannot break, but till now in the history, since say 2004, we are seeing chart here. Since 2004, all the prices are within this range. Tomorrow, extremely good news can come and this can break and create a new trend. And any bad news can come worse than what we have seen last year. And this can break down. But this will not happen as overnight. So if we know where to exit and where to put accelerator button, we will be in better situation, right? If you know where is the reversal, it will not happen that tomorrow morning BSE index will open here, right? 11,000 outside this channel. These things will happen gradually. Whether it is it will get the pace, extreme pace, good pace at certain point, whether it's a downside or upside, but it will start gradually. Like when this fall came, now we are seeing the monthly chart, so we are seeing the bigger falls here. But this fall took place in more than 1 year. Like here it was a January 2008, and the last point came up to March 2009. Means this fall was consist of 15 months of gradual fall every day. And in last year it came within 2 months. January was peak of the market, and by the end of March we have seen the lowest. So it happened within 2 months, this extreme fall. But this extreme fall is much lower compared to this fall. So this fall was there for 15 months, and all across the indices, even the good stocks were good stocks means which having a good results, still they were falling because overall broader market was negative. Here also everything fallen. It's when broader market will fall, everything will fall, no matter whether the company is good or bad. So even I know we have a sentiment that overall this is going to perform. Because we are little short-sighted, we always want to see things in a daily, weekly, or monthly basis. We sometimes miss what is happening over the big picture. Sometimes I'm not saying that everyone is optimistic on the longer picture, but optimistic for the longer picture does not mean that these things cannot happen. Imagine somebody invested here. So imagine just 2015 high, somebody invested that I'm a long-term investor, and he was investing for 2020 for his daughter's marriage or building home or anything, any plan. Everybody has a plan, right? So somebody thinking that my child will pass 12th and I will send him USA for studies in 2020. And he is building his fund here. Imagine no matter how long investment you are planning, there is a risk that here he required money. He cannot wait, right? Market to outperform again in 2021. Suppose he need money in March for the admission. He has to sell it, right? There is no other choice. Even if he knows that the market will outperform in the near future, but invested in 2015 January, say mutual fund, and he will get almost same or maybe lower performance. Why lower? Because his money was invested in here also. He was investing in the SIP mode, right? He was doing every month. So his average will be higher than the starting point. His average will be somewhere here. And when he requires the money, market might be much lower. So this is the risk of market. How to avoid this risk? The best way is to know when to exit. Best way to know whenever we are doing some investment, where we should book the profit, where we exit from the stocks, where we exit from where we can sell the land also, right? Somebody suppose invested a land and next day some a kachra business started just behind your bought land. What will you do? As soon as you can sell, you should exit out of that land because valuation will deteriorate, right? Nobody would like to buy a property where a butcher shop is open behind it. You understand what I'm trying to say? So same kind of risk happens to this broader market also. So even if longer picture is good, we will always focus on what will happen on medium to short term also. So this is a broader picture. And you see, this is a median line in between. The prices will go either extreme end of upside from this median line, and whenever it will be on the extreme end, it will come back. It will come back. It will come back from both the sides. So whenever it will be extreme fall, it will come back to median line. So whenever it will go up, it will come back. Whenever it will go down, it will come back. Because this is the average line. We know that this is a median line. So when it is gone down, it came back. Now this is a bigger picture. Sometime this acceleration, we are considering this zone from here, but there will be some smaller median zone also. Means this is an extreme picture, right? This is not happening every day. And so we should see what is the realistic picture. So what is the realistic trend here? Realistic trend is this one. That is also a reality. Extreme is also a reality. Realistic picture means this is the market where we should not be much worried. If market goes down, that will be because here it is 4,100 and this is 2,800. Within this 40% of fall, your stock prices will be like 70-80% fall. Some stocks will be like less fall than the market because this is average fall, right? But most of the stocks will underperform in those shorter period of time. So 70-80%, 60%, 70% prices may go down. So we would not like to, better we will sell because we never know the end. This channel is made based on these extremes, right? We never knew this end, we never knew this end. This end could be here also. This end could be here also. That will create a new possibility. As of now, this is the boundary. This is the extreme boundary upside. This is the extreme boundary on the downside. So here on the lower side, we will look the opportunity for longer term investment. There is a high possibility that market will bounce back from these lower ends. When we know these 2 points, the same point has given the support. Can you imagine? After 10-12 years, market falls and exactly it took the support from the trend which is from 2004 and 2008. Can it be more precise than this? Can any fundamental investors can give a call here that let's buy because this is the extreme low? People will say that's the cheapest price. It is cheapest price. But here as a technical investor, you can pinpoint and you can say it's an extremely good opportunity to buy. And here risk is low because risk is low means if this support is broken, immediately you can be out. Or if you have a risk appetite, you know that from here the chances of getting lower is very nominal. So if we strictly talk about the fundamental technical picture, we can pinpoint that this is the lowest point we can make. Somebody can exactly predict based on these 2 lines that market will bounce back from 9,900. So this will happen on the bigger pictures also. This will happen on the medium picture and smaller trend also. Like it happened last week, right? This is the support of a small cap and it should bounce from here. This is the probability was there and market took the bounce from that exact point. So we can pinpoint in the technical analysis that these are the areas where it should bounce. If it does not bounce, what does it mean? Technical will give you only a direction. It will give you, okay, it is not bouncing, you should exit. So that exit call and buy call we have to take. And that between that buy, taking an opportunity for that tip for a buy and exiting, that's a different perspective where both can be right. Somebody, when market will bounce, buying, the one who has bought is correct. If market is getting going much lower levels, those who sold are correct. So, but it's all about taking that point decision. If this is broken, I will exit. If it is taking bounce, I will buy. So that within 1 hour, that decision was crucial because we are dealing with the lower time frame. So same thing happened in the bigger time frame also. Here for 1 week, 10 days, or you can say 1 month, we had an opportunity to buy because we know that this is the extremest low possible on the longer time frame. After that, even money has not value. Banks will fail. Your money in the bank might get wiped out. A lot of banks failed, right? So it's not that share market only fail. After this, what will happen? You have a property, say 10 property. If this COVID could have gone extreme, say there is no solution, no injection, what will happen? Does your currency or money has any value? Only food will have a value on after that time, right? Food and medicine. You can say, right? Even education
Yes.
infrastructure will collapse. If this would have gone, that there is no solution of COVID. Imagine, this is a horror movie, right? COVID, we got a solution. Suppose tomorrow any virus comes, which has no solution, and it's a airborne. Imagine, airlines will stop next day, right? Everything, every communication, every common place, movies, theater. So business might get disrupted, but it's not about the business disrupt. Life itself will get disrupted. So the risk here in the market is actually reflecting the risk what we are having in the life. So market reacts quickly than what we can reflect in the actual life, what we can think of it, because we are not thinking on those perspective. What can goes wrong from here onwards? Every day we are listening about the global warming, right? We are not thinking of it, that these things can, these falls like COVID happen, global warming can affect in an extreme position after certain time, maybe 40, 50 year, 100 year, 500 year, we don't know. But these things can happen where people do the warming. The same thing in the market. These all big falls will start from somewhere from the lower levels. We should be watchful because ultimately we are all here investing hard-earned money. So let's, from the philosophical point, let's come back to the technical chart once again. So if you leave the extreme ends here, this is a normal picture here. In the normal picture right now, what is the possibility? What happened all the previous times when market touched this is the normal here, normal point. Anyone like to answer?
Either it will go down in the same channel or it will came up
Either,
and go down.
Only one time it has gone up. What do you mean by either? No.
I mean to say that
Whenever it touches the upper channel, it comes down.
It comes down. This is the normal picture. It happened till now. Somebody please mute. Yeah. Okay. So this happened only one time, that this channel has been broken, and just don't consider it as a 4-month upside. See what happened here, 5,700. It has been to 8,700. There's a 60% jump in the overall market. Means all the stocks will double or triple. If you good stocks, if index is 60% up, how much is the index up from the bottom? 9,700. This was a BSE bottom, and it is right now at 21,000. So roughly 2x. And we are seeing a lot of stocks 5x, 6x. Correct? Because this 2x is an average of everything. So the good stocks are 5x, 6x, 7x. Some stocks are like 10x. So if a market goes from here to the extreme top end, what will happen? Suppose market goes here from this point.
It is bound to come down.
No, bound to come down. It will come down, it will crash, something will happen. But you think about the opportunity here. Yeah, this is a two kind of opportunity. So market may go here.
Average 3 times, or some stock maybe 20 times, 15 times, 10 times.
Yeah, so we are talking about here the return that can go like 6, 7, 8, 9, 10 times. And how much we will lose? Think about it in this perspective. It on the 60% bounce, we will get 4x, 5x, 6x in next maybe 1 year, or maybe this can happen slowly. These are all possibilities. We will see that if this breaks here, we can see here by 2030, 2023, this can go here. And before going there, that this will be in like zigzag. This will be like this. Okay. So this is one possibility, but within this possibility of going Sensex 48,000 or 50,000, this is not Sensex, sorry, S&P 500 means all 500 BSE 500. Same thing is happening on NSE 500 also. So the opportunity is to have a index itself 2x means the stocks will go 4, 5, 6x. But any correction, we will lose 40%, 50%. So here we are talking about the risk reward is much higher at this point. Why risk is lower? Because any reversal, we know that this is a reversal. So any on the top end of channel or bottom end of the channel, risk is known. You understand? So here there is a high possibility that this will come down, but we know when it will be coming down, we will be knowing what is happening. We should get out, right? Next day morning, we will not open, we will not wake up at say 16,500 as this index. So if this gets a breakout, we are seeing a good, very, very extreme bullish run we have seen till now. We will see this kind of run in the market. And this can take time, but whenever this will happen, we will see the extreme good run. So this is how to take the broader picture. So right now we are at a very crucial stage where reversal can happen and breakout can happen. So last week candle, 2 weeks, what is it telling? Whether we are going to see the reversal or breakout.
Seems like a breakout because there is a gap.
Yeah, so this correction and there is a kind of breakout. So before going monthly to daily, let's see what is happening on the weekly chart. So on the weekly chart, this was a peak. Now,
That was weekly.
yeah, let's see on the bigger ones again. So every time there will be some peak that will create resistance. Every time this peak was created, it has become resistance. When it broken, it took the same points almost as a support and gone back. Then the next peak made that become resistance. I'm taking time on this one. Next, all charts we will see that quickly because charts are already made. So here the breakout came, same will become almost become support here in this zone. We can say this end of this has become support. So when the market has crossed this peak, we know that this is the last point. We should wait for extreme buying opportunity. Correct? Every time there will be a breakout, whenever there will be a fall, definitely we will not, we are somewhere here. Consider it we are here or here. Okay, because we are here, right? We are replicating the same position where the market was on 2015, 2018. We are somewhere here, right? Sometimes this kind of false breakout might come and market will go back. So here also any 1 week, 2 week candle, we cannot say, we cannot relax that now we are everything we are going to see on the 4x, 5x, 6x. Mean to say, on these points, there is always a risk of reversal. Correct? Because of these points, we have seen reversals on the previous times. But whenever it will come down, we know extreme low, what could be the possible low. Anytime market has crossed the previous lows, it has not gone below that. Forget about this swing low, but actually it has not gone below that.
Correct.
Right. So same thing, whenever there will be anything extreme happening, we know our next point. In the, this is I'm talking about all 500 stocks. Then there will be some leading sectors, there will be some lagging sectors. So some sectors will hit this stop loss first, and some sectors will still have their bounce from the somewhere upside itself. Not everything will underperform, right? When COVID came, that was the opportunity for IT companies because they have started doing more business in terms of, you can say, we all started using more computers, right? Businesses, everything. So these are the opportunities. I'm not talking about just IT. Any new challenge will have opportunity for some companies, like pharma companies or IT companies. Something even you don't know about the personal vehicle. The public vehicle might get have a less priority, right? So whatever here we are seeing as a bigger picture, same thing we can do on the smaller scale. Okay, this is the last consolidation phase. So market should bounce from here. This is just like 15,900. If you'll wait to buy on 15,900, we have to wait for multiple years, right? See, someone here waiting to buy on this level will have to wait after 1 year at least. Somebody waiting here to buy here has to wait 3 years, right? Correct? So somebody waiting to buy here, if reversal comes, he has to wait for many years, maybe 1 year, 2 years. So, but these kind of smaller time frame can come in few months. Like if market crashes, we know that here it will give the bounce. Here it will give the bounce, and this bounce we can have 10, 20, 30% of return within very short period of time. Now this consolidation is over, so we know that this is a support. So same thing, we'll start looking on the smaller, much smaller time frame. Like this is the peak it was making on market. Now when this dip came, the same thing becomes support. See closely here. Was it a support? So the smaller time frame will go, the previous consolidation will become the, so swing low, this was the opportunity. Now market took the reversal, and with the same logic, we can go on the hourly chart. Hourly chart, see, these were the peaks, and market took the support on the same points. Now on the same logic, we know that market is breaking out this zone. So somebody investing for daily, weekly level, he should take care of this level. Clear? See, this is the peak it has broken. So it should not come back to this level again if this trend is actual a trend. If this is actually a new trend, this should not come back below this, right? So somebody investing for a very short period of time, he should make his trends on hourly charts. Like it might come up to this channel. This was a breakout. This come and go up. So these are the possibilities. So we can start, you can say, investing from the smaller supports to bigger supports and bigger supports. And same way, we can start selling when a support breaks on the hourly chart, support breaks on the daily chart, and support breaks on the weekly chart. So we can come out of market in terms of profit booking, right? Any question, anything, anybody like to have some words? And then we will go and compare all the indices. Yeah.
Yes, sir. Mahesh here.
Yeah. Mahesh.
Like no, if it's break the earlier support of higher range, break
Yeah.
means downward break. तो
Yeah.
अगर उसने वो जो earlier पहले का जो support था, resistance था, वो अगर downward fall हो गया, तो हम लोग next level लेंगे जो पहले उसके बाद का जो support था,
उसके बाद का सपोर्ट था, तो क्या होगा, मार्केट वहां तक तो जानी ही जानी है. तो बेस्ट वे क्या होता है, अगर ये टूटा तो आप सेल करो और वेट करो नेक्स्ट का, वेट करो नेक्स्ट का. अब हम इंडेक्स पे तो नहीं कर रहे हैं, इंडेक्स तो एक ब्रॉडर पिक्चर है, राइट. हम स्टॉक्स पे कर रहे हैं, तो सेम चीज हमें इंडिविजुअल स्टॉक्स पे डिसीजन लेनी होती है कि अगर ये ब्रेक हुआ है तो उसकी दो पॉसिबिलिटीज हो सकती हैं. नेक्स्ट, एक तो नेक्स्ट पे जाएगा, वो नेक्स्ट पे शार्पली जा सकता है या बहुत टाइम ले सकता है. फॉर एग्जांपल, अगर मैं जैसे अभी मैंने कल कुछ आईटी में कॉल्स दी, राइट. अब यही सेम चीज हम एक क्विकली चलो टीसीएस में देखते हैं. ओके, सेम कॉन्सेप्ट हम टीसीएस में देखते हैं. ऑल टाइम हाई से शुरू करते हैं. दिस वाज अ एक्सट्रीम हाइज ऑफ टीसीएस. Let's see here. This is a kind of channel consider it the way I made the parallel channel. These are 4 channels. Okay, this is an extreme up and this is extreme down. Within this, TCS was almost every time in the upper side of center line. Even this drop in the last year March took the support on the upper side. See this line here, red line. How precisely it become the support here, right? So any extreme case, it can come down like this fall, like this 2008 fall. But now let's come closer and we'll see what I'm talking about. On the weekly level, it made a high in September 2008 and it never crossed till 2020, this line. Correct? So same thing. Now we are talking about weekly level on yearly chart. We are talking about 2018 to 2021 or 20. The same thing was happening here. So when it made peak here once and again took the resistance here, let's go to the daily chart. When it made peak here and once again got rejected. Now we should be very careful that I will reduce my allocation, or at least I will not do the new allocation here. Because we never know, like 2018, once this high made and got rejected once, you never know how many years it will take to surpass this. This is a very good chart. It took 2 years. I will show you the charts where it took 7, 8, 10 years to cross this previous high. Now quickly go to daily chart. See this resistance, same become. We'll start one more meeting after this if somebody does not know. Okay. So this extreme high, extreme high, extreme high. Now it is broken. So I'm interested for this time, just like 80-20 principle, 20% time will give me maximum return and 80% time will give me 20% return. So 20% time might give me 80% return. 80% returns means, does not mean 80% return. It means whatever return I'm going to get, 80% of it will come into very small, short time frame. Whatever it has to return to give, say 25% it is supposed to go. So out of 25%, 17-80% will come very short span of time. And